Hey, what is up everyone? Welcome into the channel. My name is Brent. Today we're going to be taking a look at officially moving from Fidelity over to Robinhood. We're going to be taking a look at 6 specific areas right here and a quick look at the portfolio. So the 6 areas today, market update, very quick. We already covered some of it earlier this week. Our bonus income, we fully transferred from Fidelity over to Robinhood. We'll go ahead and cover our bonus that we received and how we'll be using this in the market going forward. Number 3, because we transferred on Friday officially, we were able to do some buys, essentially when the market was selling off. And then our stock journal update, our dividend portfolio update, we did some sells earlier this week that lowered our dividend income on a monthly basis, yearly income. And then we'll go into some big wins this week so far in week 13, 2026. Okay, just really quickly, we'll try and make this as fast as we can, so definitely stick around till the end. If you would, please go down below, smash that subscribe, smash that thumbs up, and let's go ahead and get into the market update. Now, as I said, we already kind of talked a little bit about this on Tuesday's video. Stock market closed Friday pretty low over the weekend. Somehow we were going to be bombing Iran's power infrastructure while at the same time coming to an agreement to make a deal. That got floated out all early on throughout the week saying, hey, on this side, yes, we're working on making a deal. It's going to happen. On the other side, they're saying, no, absolutely not. We're not making a deal unless it's on our terms. And then as that news kind of fell apart, oil continued to spike. The S&P, NASDAQ, and the Dow Jones all fell to new lows here going into Friday at close. And we can see the S&P 500 is now well below that 200-day moving average at 661. It's at 634. It's at August 2025. If it continues to break down from here, we could fall back as low as $600 on the SPY. Q's kind of same thing. We're well below that 200-day moving average of 594. We're at 562. And again, hanging around those August 2025 lows. If it breaks below here, we could fall into that $530, $520 range on the Qs. Dow Jones, essentially kind of the same story, right? We're below that 200-day moving average. Again, right around those August lows. If you can continue to fall around here, we'll just essentially come back to where we had recovered after the tariff fiasco. The only thing out there that is hanging out above the 200-day moving average right now is the Russell 2000, hanging out at 243, above at 242, right? We're just very smidgely over the last 2 weeks now, gaining some support from that 200-day moving average. But if it breaks, then we'll continue to do what the S&P, NASDAQ, and the Dow Jones has done, just break to the downside and be using that 200-day as resistance instead of support. So that's the index update. In terms of the spider ETFs and what moved higher this week, we had energy up 5.48. That is the ticker symbol XLE. That is the energy sector ETF. Followed right behind there was the utilities sector, ticker symbol XLU, up 2.11. And the only other positive sector out there was the consumer staples here in that purple, ticker symbol XLP, up 0.6% on the weekend. The heat map here over at FinViz, this is the 1 week performance. You can kind of see the exact same thing. And the S&P 500, only consumer staples, right? Walmart, Costco, Coca-Cola, Pepsi, were really kind of positive out there within the consumer staples. We also saw energy ticking higher, right? 5% higher this week. Exxon was up 7.09, Chevron 4.67, many other oil and gas companies, basic materials, utilities, very positive this week as markets fell lower. Okay, so that is the quick market update going into this following week, week 14. I do think things are going to continue to escalate, as I saw some reports that there's more countries and more groups joining in to barrage and kind of hold things tight. So I do not think things are going to be de-escalating. I think things are going to continue to escalate. We're going to continue to see oil move higher, the markets pull back even lower, as we said, into those lower numbers discussed. So now number 2, our bonus income. Let's drop into the income tab. So we officially transferred from Fidelity over to Robinhood. I initiated my transfer before that bonus of Wednesday went away. So I initiated it on Tuesday. By Friday, I had my bonus within the account. I had my full transfer from Fidelity over to Robinhood. Just within 4 days, I was able to make that transfer. So you can see here, I got an email from Robinhood saying, hey, you earned $6,275.51 bonus on this transfer, and it is now available for you to invest. So if we take a look at the bonus of 6,275.51, unfortunately, my account, while it was using margin, my statement showed that it was holding those holdings in margin. It didn't count towards that actually being in margin. So I only received the 2% transfer bonus. So based off my account value at the time of transfer of 313,775, which is lower, right? The market has pulled back a substantial amount. I think we're in week 5 of pulling back now. So our account is, at the time was $313,775.50 based on that 2%. That's why we got that bonus. So our account value when we transferred over the Robinhood was $320,051.01. So that was the value that we transferred over on Thursday and arrived within our account and was active on Friday. Okay. Now into our buys and sells, because now I am fully over at Robinhood. We went ahead and initiated some of our very first buys over on Robinhood. Our very first one was on TSPY. This happened on Friday on March 27th here in the morning at 11:33 and 11:35. So I initiated TSPY. I went ahead and I injected some capital that I had on the side as well, along with that bonus, right? I'm not injecting it all at once because I do believe that over the next few weeks, we are going to continue to see some more downside and I'll be able to buy up more shares. But I do want to continue to dollar cost average. And I don't like capital just kind of sitting in the account, not really doing anything. And you can't really time the bottom. So regardless of whether I think we're near the bottom or at the bottom, or if I think we're going to go up, if I think we're going to go down, I'm just going to continue to inject some capital. So this is about $1,000 that we injected here on Friday. We picked up 21 shares of TSPY at $22.89, and we picked up 22 shares of TDAQ at $23.05. So that was our purchases. We'll go ahead and look at Robinhood here in just a little bit. But based off these shares, if we take a look at our stock journal, if we head down here to week 13, early on, we kind of covered this in our prior video. We had sold out and repurchased. I was able to capture 10 additional shares of TSPY, 6 additional shares of IWMI earlier this week. I had tried to do the exact same thing with TDAQ. I was going to capture about 10 additional shares of TDAQ. Unfortunately, at the very end of day, when my purchase at 2404 came through, market closed and I wasn't able to fulfill my whole amount of shares being repurchased. I was only able to buy 224 shares of TDAQ. I did end up picking 1,735 shares of QQQI, which is very similar. QQQI has a less yield, lower payout than TDAQ. Sometimes from what I've seen in history, QQQI is a little bit more stable versus TDAQ, but here recently, actually QQQI fell further than the TDAQ position that I had re-entered essentially at that same time frame. So I'm looking forward into the future when the market does do a bit of a pop. I'll go ahead and liquidate my QQQI position and move those into TDAQ, kind of buying back my original shares of TDAQ and then some more using that pop. But here on Friday, as I said, on Friday, we did do a 21 share purchase of TDAQ. I bought 484 shares and 5 cents, picking it up at 23.05. Currently, the current price at market close was 23.06. It did move up after hours, so we're actually a little bit higher than this, but hey, that's positive. And then TSPY, again, I picked up 21 shares of TSPY. My buy price was 22.89. At close Friday, it was at 22.90. The market after hours did move a little bit higher. So I invested on Friday $964.74 of equity into the markets and kind of injecting it. Again, I don't know if this is the bottom. I don't believe this is the bottom, but regardless whether it's the bottom or not the bottom, I just want to continue to make quick injections of prices where I feel are a lot better, right? This is nearly $3 cheaper than where I was buying TDAQ and TSPY in the past. And I'm getting a higher initial yield entry on these specific shares. The market with time hopefully will recover. Our dividend portfolio going into number 5. Our dividend portfolio did do a bit of a hit this week in terms of total dividends. So as I said on early Monday, I liquidated my TDAQ position and I was trying to buy it at a cheaper price. Unfortunately, only 224 shares of that lower price were initiated. So I did end up lowering my cost basis on TDAQ, but because market closed, I was not able to pick up the rest of my 3,660 potential shares, and it locked me out. So I lost, based off my sell of TDAQ, $1,278.90 of monthly income. That lowered my yearly income by selling out of that by $15,346.80. Now, like I said, after hours, I did pick up QQQI. If I had just waited till the next day, so I picked these up on the 23rd. Here's the 23rd right through here. So right through here at close, I bought QQQI at 50.61. If I had just waited it out and waited till the next day, I could have got, instead of at 50.61, I mean, if I had just waited a little bit more the next morning after, I could have bought TDAQ. I could have rebought into my TDAQ position, essentially 1% lower. But I didn't want to be out of the market just in case, hey, some news gets floated out, some tweet, some social, some message gets tweeted out that, hey, some deals getting planted. And then the market, instead of moving down 1%, we would move up 1%. I would kind of miss out on that initial pop and then move out in the morning. Eventually, it kind of trailed off towards the end of the week, as we kind of saw. But I did move into QQQI just to kind of hold something very similar to my TDAQ position. So I purchased 1,735 shares. That increased my dividend income there from 0 to 1,056.44 monthly, or increased my monthly income from 3,075, right? It got nerfed down the prior sell and then went up. So the difference there on a yearly difference between holding TDAQ and QQQI. So TDAQ is Tap Alpha, QQQI is the Neos. They're very similar performance, but one just pays a higher dividend yield. So the difference in that yield makes a difference of around $2,669.50. So that's almost $3,000 yearly difference in income just because of moving out of TDAQ and into QQQI. So let's go ahead and move on to TSPY. This is on Friday. So on Friday, I had purchased on Friday. I picked up some TSPY into TDAQ. So these are positions that I continue to want to, I want to hold these long term. So I picked up 21 shares of TSPY. We moved from 40.7957 to 4,100 shares, 0.57, and increased my monthly income on TSPY by $6.30 on a monthly basis. On a yearly basis, that increased my income going forward by $75.60. Now, TDAQ is still my long-term position that I want to hold instead of QQQI. I will eventually move back into TDAQ, but at this time, when the market kind of sold off, I'm going to have to wait a bit before I feel like I want to sell out of my QQQI and then move into TDAQ. So given some time, once we do have a little bit of a pop here to the upside where I'm not down 4.20% on QQQI, say for example, we move up this week by 2-3% and there's some volatility in there, I might use that volatility to move out of QQQI and then back into TDAQ, hopefully getting more shares than where I initially sold from. But that is, we'll see how we end up at. And then our TDAQ position, we added 21 shares to our 224, which ends up at 245 shares total. We increased our monthly income by $7.35, or on a yearly basis, we are going up $88.20. So just on Friday alone, we increased our yearly income by $163.80. Unfortunately, because of that move from TDAQ to QQQI, it did lower our overall yearly income a substantial amount, but I don't think this is going to be anything hurtful because all I have to do is move out of QQQI and then move into TDAQ. So we did lower our yearly income there a smidge, but we'll get it back. I'm not too worried about this here in the long term at all. Okay. So that was just our portfolio update, our big wins in terms of things this week. We did get our Robinhood Gold card. I initiated my transfer on Tuesday. On Wednesday, I made my video saying why I wanted to transfer over from Fidelity over to Robinhood. Got my Robinhood Gold card here as well. It is very nice, heavy. My wife was very surprised. She's like, wow, that's a very nice looking card. So we did get also a slice from the Robinhood pie. I got $5.59 plus. There was a couple other things I did on the Robinhood side. Actually, I could pop over the Robinhood here now. Robinhood's a little bit cleaner. Some things I do not like at Robinhood that I really enjoyed over at Fidelity, but I don't want to talk about that in today's video. Otherwise, it's just going to continue to get longer and longer. But our equity within our portfolio is at 316,376. This is not all holdings. Our actual equity invested right now is sitting closer to 304,000, right? The market has pulled back a substantial amount. We're now sitting at essentially all-time lows within this portfolio for the year. We're down 9.45% on paper, or 6.72 with the dividends that we've been paid out this year alone. So we're going to continue to begin investing capital. Right now, I injected quite a bit of my own capital into the stock market, plus we got paid out over $6,000 of a bonus within from transfer from Fidelity over to Robinhood. So I have around $13,000 of uninvested cash that we're going to begin to inject into the market. Now, all of this is not for injected into the market. Some of this is from dividends that were paid out in the last month. And we're going to go ahead and pay down our Fidelity credit card down to zero. I got to pay off my mortgage in the next few days going into April, and I got to pay out my car loan, which is also being due, and we're going to be paying that out of the Robinhood account. And I'll go ahead and go over that here in the future and kind of showcase how we do that as well. If you guys are interested in kind of following along, definitely subscribe, follow along. But yeah, that $13,000 cash is not all that's going to be invested right away. I'm going to continue to dollar cost average on a weekly basis. And eventually, whether it is next week, 2 months from now, a month from now, the market will eventually kind of bottom out and people will be like, man, being able to buy Microsoft at $150 or Meta at $250 or SPY at $300, they're going to be like, that's a good deal, right? That's a good deal. But we're not there yet. We'll see. So that, guys, is going to be it for today's video. We went ahead and covered our quick look from moving over to Robinhood from Fidelity. We went ahead and covered our quick market update, bonus income that we received, our buys that we performed this week, and our journaling and dividend update, and some of the big ones. This card is very nice. I'm really looking forward to it. I'm not using my Fidelity card anymore. This thing is 3% cash back, whereas my Fidelity one was 2%. So that's a big difference there alone. And it's going to be great going forward. So definitely looking forward to it and creating more content. If you guys have any questions on Robinhood, Fidelity, things that were bought this week, things that you guys are buying or looking forward to, definitely drop them down in the comment section below. And with that said, I do appreciate everyone tuning in. Be sure to go down below, subscribe, smash that thumbs up, and I'll catch you guys in the next one. Bye-bye.